Right, so with the euro, just from a technical standpoint, not looking at the fundamentals, this is a move that we talked about earlier in prior analysis. These are old drawings. Um, so we had this impulse correction and the continuation. So that's a very strong continuation. Um, Now, this probably has legs, but um, the way I approach trading is that I do not chase parabolic moves. I want to be in the parabolic move at the origin, not when we're trading around key levels such as here. Um, so we've broken through 111 and we're up to 111.20. The weekly chart shows that this is an area of potential resistance. I've just put a volume profile on this from the top of the range back on January the 21st to the lows. In fact, we should pull it out to over here. And what we can see is that the price, current price, is trying to move up towards 112.50. 112.50 is going to be the start of this higher volume area. Okay, so up in here. So we've got sort of a void of liquidity between here and there, which would suggest that this could continue up. So just cleaning up the chart then, let's remove that volume profile. We've got an area of interest up in here. So I'm just going to clean up this chart a bit. So we've got a better picture of what's happening here. The price can be regarded as being in a bullish trend overall, but it has shown signs of deceleration along the way, but they've been higher lows. So that is a market that is moving higher. So that's higher lows as well as higher highs. So we'll just mark those on. So these are your pivots on the downside. Okay. Now we're breaking resistance, old resistance here. So give that a dashed line. And as I said in the earlier in the video, this does seem to have legs on it. Um, what we may see is a push up, and we've got I would say that perhaps coming up into the body of the up to here, 112.70. So we've got this candle that was responsible for the sell-off. So the move up and then down and continuation. So all of this area, in fact, is an area of interest, as large as it is. And then we've got these finer levels in between. So we're just going to pinpoint that area as an area of interest, and we're moving up into it. So I'd be cautious chasing the rally into this area of interest, where we can quite easily see selling pressure emerge, and that could be something that you'd want to be a part of, targeting back in towards the trend line that's developing, the neckline of this W formation. So I've marked that up, those levels of the chart then, 110.12, 108.44 on the downside. This is the weekly chart, so these are wide levels, but it's a blueprint really for what to expect in terms of the market flow on the weekly chart. On the daily chart, we have a W formation. It's an overextended formation, and we can expect a correction at some point. But again, this is a strong rally, and I wouldn't be getting in the way of it until we see signs of deceleration. And what we'd be looking for then on a lower time frame, such as the 4 hour and 1 hour, will be for red candles, opposing candles, and looking for the swing lows, such as here and here. And whatever's going to form at the correction, at the time of correction. So we might have a scenario where the price moves in, makes a higher high, and then we've got a new higher low. And then if the market does start to decelerate, as it will at some point, then we're going to be looking for a break of whatever bullish structure, such as 110.79, just hypothetically speaking. We'd want to see a break of that to confirm that this market is decelerating and change of character for the move lower. But all of that's going to play out over time. We need to wait until we need to see the close of today and tomorrow. Um, for our bias and market structure to play out to give us our directional bias for the foreseeable future. So really, depending on your strategy, but for me, from a swing trading point of view, we need to sit on our hands, and then from an intraday trading point of view, scalping these moves. Again, we need to see what I've just described and on the lower time frames. So currently, there's nothing to suggest this market is coming back in. It's got 7 minutes till the end of this candle. This can quite easily continue up. We don't know. But we can move down to our really low time frames to start looking for our areas of structure we want to see eroded in deceleration of the rally to confirm a corrective bias. So at this point, we still haven't got anything to go by. We're still on the front side of the move, so this is quite easily continue heading higher.